Welcome, my name is Vishal Tekshilani. Today I'm speaking to Blair, Hannon, an ETF specialist at BlackRock. Now, BlackRock is the owner of iShares, which is the world's largest ETF manager by asset size. Blair is going to talk to me about BlackRock's views of the world in 2019 and two investment themes that Australian investors can potentially take advantage of in the new year. And he's also going to talk about the 2019 outlook. Blair, it's so great to have you here. How are you?
Thank you. Great to be here.
No worries, that's great. So Blair, let's kick off. So BlackRock has this thing called the BlackRock Investment Institute, which is all about your portfolio managers, your investment experts, your analysts publishing views on markets all the time. Talk us through what they're seeing in 2019.
Look, let's note that 2018 has been a reasonably tough year for markets. The ASX 200 is down. There's only really a few markets in the US that are actually trading up at this point in time. But we do expect, as our base case, that 2019 will be better. We do see some positive performance out of equities and bonds for 2019, though more uncertainty. So we note that trade disputes, they're very hard to gauge. We know that they're moving back and forth significantly, and we do see that we are probably later in the cycle. So this does increase volatility, in terms of equity markets, and we have seen that of late in 2018. Obviously, the tightening US monetary policy squeezes markets a little bit as well. So the US Federal Reserve has talked about going to a neutral rate. We do see rates probably potentially still rising, but we'll be capping out at below pre-crisis levels, so below GFC levels as well. And you may have noted that there is some recession talk hanging around in the US. We don't see any imminent threat of a recession at this point. Potentially through 2020 that might become more material. We think it's a little bit early to make that call just yet. So look, we are optimistic about equities, although we do have reduced conviction around that. And we do see our preferred region of investment still being the US.
Okay, so you want to be quite selective around the US, invest in quality companies, it sounds like. Talk us through that view. Where do you want to be in the US?
Again, if we're talking around being late cycle, we know this bull run's gone for a long, long time. What would you do? So what are the best companies that are going to weather that uncertainty? I think that's the quality. But what does quality mean? Quality means access to companies that have strong balance sheets, strong earnings growth, things like really good free cash flow. So these type of companies, so where would you find those? You find those in areas like healthcare. That's probably well known to some investors. And also, we think tech. It's probably not the first thing that comes to your mind, but we think there's pretty good earnings growth for many tech companies, again, being selective, and also reasonably good balance sheets.
Okay, and the other area, slightly more contrarian, is emerging markets. Why is BlackRock seeing emerging markets as an attractive asset class?
Look, we've been reasonably positive on emerging markets for quite some time. We know that the US dollar is a bit of a counter sort of mover on an emerging market economy. But we think there's key areas of opportunity there. I think to note, what are emerging markets these days? Emerging markets are predominantly Asia. So you've got a big chunk of that, 30% being China, then you've got South Korea, you've got Taiwan, you've got India. So it really is the Asian story. And we think that out of emerging markets, Asia is probably the better place to play anyway. What does that make up now look like? From a sector point of view, we're talking about financial companies, we're talking about tech companies, we're talking about telecommunications. So again, very different to what it was like 20 years ago. We think that there is solid earnings growth in some of these businesses. And I think some of those country-specific risks that we heard last year, Turkey, Argentina, are mostly behind us now.
Okay. So to recap, ways investors can play this, they can invest in international stocks at iShares. You've got a couple of ASX-listed ETFs. So for the US, healthcare, world multi-factor. For emerging markets, you've got quite a number. Emerging markets, South Korea, Taiwan. Where can investors find more information if they want to think about some of these ETFs and accessing these themes?
Obviously, there's a couple of places, one being iShares.com.au. There's a huge amount of a wealth of information there that investors can look for in details around what the ETFs hold. We're happy to provide transparent information around what they hold at all times of the day. Things like access to dividend yield. Also through nabtrade as well, because obviously you have your own ETF screener that they can look at and figure out what best suits them from an investment point of view.
Okay, so last question, Blair. BlackRock being the world's largest asset manager and iShares being the world's largest ETF manager, you have a pretty good pulse on where money's flowing around the world. So talk us through institutional money flows and what that means for retail investors.
Yeah, look, it's a good question because I think predominantly the use of ETFs in Australia is by retail investors or wealth managers looking to use them as part of an asset allocation or to diversify into different markets, as we talked about US or emerging markets, wherever that may be. Internationally, though, they're predominantly used by institutions, and that may be a fund manager, that may be a hedge fund, and it's to get access to areas that maybe they can't get access to easily.
Yeah.
These are really ways that they get access to liquidity as well.
Right.
Obviously, they're moving large amounts of money. So what do we get to see by that? We get to see where the money is flowing.
Sure.
So we know that the US is still getting a lot of flows. It did taper back somewhat in October during the volatility in November, but has ramped back up significantly into the back end of the year. We also see, again, aligning with our views, emerging markets, specifically China, seeing a lot of money flow into that area as well. And Japan. The Bank of Japan is still buying ETFs significantly on the back of their program. One that has struggled, and we know that from a return point of view as well, is Europe. So Europe has seen pretty weak flows, actually outflows across the year. They're probably not a surprise for investors. Brexit's been weighing over that economy. There's a lot of politics coming out of places like Italy as well that people sort of are moving back from. So I think to note, look, the ETF industry now is $5 trillion. It's a huge industry.
Yeah.
At iShares, we actually think it's going to move by 2023 to 12 trillion.
Okay.
So these are big numbers, and I think they do give investors some insight around to where money's going and where they can potentially use that money.
Okay, Blair, thank you so much for sharing all these fascinating insights from BlackRock with our investors. Really appreciate your time.
Thanks, Vishal.
No worries. I hope you enjoyed this video. Now, please remember what we talked about today isn't investment advice. If you're thinking about investing in ETFs or any of the investment themes that Blair talked about, it's really important that you do your research and please consider seeking financial advice. My name is Vishal Texanani. Have a happy holiday and I'll see you next time.